Welcome to Investors Insight, where today's topic is fed up with the Fed and AI. A lot going on this week. As always, Trey's going to talk about the importance of the Fed meeting. I'm going to talk about global market trends. And then Ty is going to answer the question, are we in a global market AI bubble? So we'll discuss that. So Trey, market moving event this week is the Fed. Talk about that.
Yeah, thanks, Bobby. We may sound like a broken record in that we always seem to discuss what the Fed's going to do, and then we talk about what it did. But it is the most important event on the calendar each time the Fed speaks and makes a decision, because it moves interest rates and moves markets. And so it's something very important to watch. This one is no different. The Fed is expected to cut interest rates again by 25 basis points. But what we've been watching, what we've been talking about is not just what the Fed does with their interest rate, but what the long-term interest rates do, because the Federal Reserve really controls the front end, short-term cash rates. But they don't have much control over the long end. And that's where the important follow through to the economy is, because savers earn money on high yield savings on the short end, but borrowers borrow long. And so if you want to increase economic output, you really need to see long-term rates come down. Because if you just cut short-term rates, you're just hurting savers, but you're not benefiting borrowers. You can see on this chart here what this is. It shows the three most important interest rates. The federal funds rate is in blue. The 10-year Treasury, U.S. Treasury, is in purple. And then in orange is the average 30-year fixed rate mortgage. And you can see going back to the summer since the Fed started cutting rates, all three rates have come down. But since the last Fed rate cut, the long-term rates have started to flatline or go up a little bit. And so the Fed's not getting as much bang for its buck on interest rate cuts. So what will be very important is once the Fed cuts rates this week, do we continue to see follow through from the long end? And if not, that's the market signaling to the Federal Reserve maybe future rate cuts aren't as necessary or expected. And so we don't see that follow through. So that's something important we're watching closely. This is also the last Fed meeting likely that we will have without the future Fed chairman being named. All eyes are pointing to it being Kevin Hassett, but I think it is a fool's errand to assume that you know what President Trump is going to do. But the expectations are for an announcement early in the new year. The next Fed meeting won't be till the end of January. So the next Fed meeting will be had with Chairman Powell as a lame duck chairman, and then a third party being the future chairman. We'll see how that looks. That's typically fairly common. The new chairperson is typically named well in advance. And so, but this will be the last meeting where Chairman Powell will be the lone Fed chairman, kind of. And so big news events, big talk. This is also the first Fed meeting since they stopped reducing the balance sheet, since they stopped reducing the money supply. So this is also very important. How do they discuss going forward now that they've stopped reducing? What's the guidelines for increasing or leveling? Fed rarely does nothing. And so you're either going backwards or forwards. So very important meeting. We likely expect a lot of market reaction from it. So those are the items we're watching closely.
Yeah, thanks, Trey. And as we've mentioned in recent weeks, we are very positive on corporate earnings growth, lower rates that Trey just talked about, and a resilient consumer. And another topic that we really haven't discussed much is that equities around the world have been positive. And you can see in this first chart that shows global market trends have been and remain positive, with all but one global market being in a positive trend. And this is news because we haven't seen this type of positive global equity trends in some time. As you can see that most of the global equity market indexes flipped to a positive trend just this year. And this type of global positive momentum is a great sign for all markets heading into 2026. It's something we'll continue to update you on. So Ty, if you're watching the news, especially financial news, AI bubble has been a common theme in recent weeks and months. Talk about that and how it relates to our portfolios.
Yeah, certainly been in the news. I know it's been in my client meetings. I'm sure it's been in everyone's client meetings. The news of an AI bubble, is now the time to get out. Has AI has it run up too fast? Interesting charts that our research partner put out here. Here is the technology sector. So actually, they have had the technology sector, while it is up for the year, it has not had any multiple expansion year to date, meaning that the earnings, any valuation increase has been justified by earnings. There's not been any kind of herd mentality coming into these technology stocks and trying to run them up and saying, hey, we're gonna have multiple expansion. We're gonna value this sector more than other sectors, for not great reasons or for, looking out into the future. Everything has been justified by earnings. And so year to date, no multiple expansion for technology is a big deal. And then, of course, technology doesn't just include AI, but still a big deal. And then if you look in this chart here, valuation, this is a valuation dispersion from November 2025, so last month, compared to March 2000. And as you can see on the left, all these companies, these are their valuations on a PE basis, are 50 times PE, forward PE or under. So not making the argument that things are cheap, but making the argument that if you look over here on the right, March 2000, we have a lot of stocks that were 150 times PE, 100 times PE, not many below 50. So you can see the vast difference here. This on the right, March 2000 is what a bubble looks like. On the left, November 2025, just last month, that's not really what a bubble typically looks like. It's much more subdued and much more reasonably expected. These companies are profitable and fundamentally sound, much more so than what they were in 2000. So short answer is we don't think we are in this AI bubble yet.
Yeah, so look, we understand valuations are high, yes, but so is the earnings growth of these technology companies to justify the higher valuations. So a lot to discuss. Obviously, the big meeting with the Fed meeting this week is very important and will highly dictate how the market reacts to finish this year and going into 2026. So we're watching the Fed meeting very carefully this week. Thanks for watching. If you have any questions on anything we've discussed, call us, email us. We love to hear from you. Please continue to have a great holiday season. Thanks.